look into this. And there it was, gazing intently at my computer screen. All of a sudden, one question comes up: has ChatGPT lived up to the hype that has already made AI a household name in the market? However, according to the leading authority on AI investing, Cathie Wood, the real opportunity to make huge money is found in the obscure companies with exclusive datasets. Tesla is the only firm in this regard with data gathered from thousands of drivers. Shares of Tesla, the industry leader in electric vehicle manufacturing, are currently trading for a small portion of what they were worth this time last year due to concerns about the company's future. What is Cathie's prediction for the remainder of the year? You should pay attention to what she has to say because she is quite optimistic about the company's future. Make sure you hit the subscribe and like buttons before we head there. For the third time since October, prominent investor Cathie Wood stopped buying a significant portion of Tesla shares a few days ago. According to a daily transaction report delivered via email, Wood's ARK Invest purchased 74,862 shares of the electric vehicle producer across 3 of her exchange-traded funds with an estimated value of $11.7 million. Exchange-traded funds for next-generation internet and technology in robotics. Our third largest interest in Tesla's suite of financial products is after Zoom and Amazon. The timing of Wood's dip buying frenzy, which Communications ZM and Precise Science also covered, is not ideal for Tesla, as investor concerns regarding Musk's Twitter diversion have been intensifying over the last few months. The notable thing to note is the recent surge in Tesla stock, which has increased by almost 100% from its January low. Based in large part on Cathie's audacious dip buying spree in December, ARK has profited handsomely. Tesla bull Cathie Wood referred to Musk as Tesla's Renaissance man during an interview. She stated that she compares Tesla to other automakers and that Tesla has a distinct advantage when asked what she expected from the company in 5 years. Additionally, Tesla is the best alternative accessible if one only considers electric vehicles and range while analyzing cars. She acknowledged that other automakers such as BMW and Volkswagen have made significant advancements recently, but added that Tesla really excels them in terms of power and range. Wood asserts that other automakers will not be able to match or compete with Tesla's combination unless they wish to lose money on their vehicles. When asked about her thoughts on large companies that compete with Tesla in the production of electric vehicles, she emphasized how crucial it is that Tesla has a competitive advantage in every way from the standpoint of performance and range. I think people will fail horribly as they start to convert from gas-powered to electric and look at the characteristics of the different automobiles, said Wood. According to corporations, gas-powered cars will become outdated in the next 5 to 10 years, and the traditional auto sector needs to find a means to switch to electric vehicles, according to Cathie Wood in an interview with Yahoo Finance. During an interview with CNBC in mid-October, another CEO from ARK shared excitement about the top electric vehicle firm. ARK has a very positive stance on Tesla, which Asha Keeney explained in a recent interview with Yahoo Finance. According to Cheney, we have to remember that it's still an early market, but we do see Tesla as one of the market leaders both in electric vehicles and in autonomous. The CEO and founder of ARK stated she was not concerned about Elon Musk's leadership at Tesla in response to a question. Investors have been worried that Elon Musk, the CEO of Tesla, has been using Twitter excessively. Wood told Yahoo Finance that Elon Musk's main duty at Tesla at the moment is preparing the business for the launch of an autonomous taxi platform, which he anticipates will occur in 2024. They think that ARK still expects this to happen in the next year based on his updated open-source Tesla model. Autonomous taxis represent a substantial driver and a potential new revenue stream for Tesla. The simulations show that they will contribute for over 50% of projected EBITDA in 2026 and 60% of expected value in 2026. Although they will make up 57% of the company's income, electric cars will have substantially less profit margins than robotaxis. ARK stands to benefit financially from its increased confidence in Tesla's autonomous driving capabilities. Despite their earlier assertion that Tesla will never be able to offer autonomous ride-hailing, subsequent encouraging advances have demonstrated that they need to be updated on how the robotaxi sector fits into the overall plan. They now anticipate the launch to take place in 2026, 4 years later than Musk had originally projected, having been persuaded by Tesla's advancements. Additionally, they predict that in 2024, Tesla will start providing ride-hailing services that are autonomous for a fee. 9% of Tesla's model instances indicate that the business won't launch robotaxi until after the predicted window has gone, even if it does. It will become widely used within that time frame. Tesla's financial position is still precarious, therefore it is unlikely that the business will take this chance. Investors' usage of the enhanced model further increases Tesla's capital efficiency. In 2025, they project that Tesla will invest between $6,000 and $8,000 for each additional unit of capacity. Thus, this represents a major improvement over the estimate from the prior year, when the corporation was estimated to have spent about $80,000 bringing the Model 3 up to date. Capital investments are now more effective than they were. With pride, we can predict that Tesla will spend anywhere from $2,000 to $7,500 for every new capacity unit in 2026. Based on the most recent model revisions from the firm, ARK's naked and bull scenarios estimate that the price of Tesla stock in 2026 might range from $2,900 to $5,800. If this happens, Tesla shares will only be affordable to huge investors, making participation in the company unaffordable for the average American. The predicted value, as stated by the ARK Invest team in August, is the mean of their 1 million simulations. These models are especially vulnerable to the year likely 2026 in which Tesla finally introduces the robotaxi. In one such scenario, Tesla introduces a human-driven ride-hailing service but not a robotaxi network, even in the majority of ARK's lowest price per share situations. ARK has previously described the strategic and tactical benefits of releasing a human-driven ride-hail, including how it might become a lucrative recurring income stream before Tesla delivers a fully autonomous service, even though Tesla has not publicly committed to launching either service. In situations when the simultaneous testing of fully automated driving systems and human-driven ride-hailing services is possible, ARK anticipates a gradual transition from its existing fleet of human-driven ride-hail cars to the autonomous ride-hail network if it is unable to build a robotaxi service. Tesla's top objective is to solve for full autonomy in ARK's many higher price per share scenarios, but in the next 5 years, the corporation may still introduce a human-driven ride-hailing service. According to an article published by ARK Invest, analysts and investors who are optimistic about Tesla's future believe the company will maintain its dominant position in the rapidly expanding electric vehicle market and even expand into other green energy fields. However, they feel that their intestinal model is methodologically conservative and that Tesla stock will trade like a mature firm rather than a rapidly growing one in 2026. Similar to energy storage devices and solar panels. Some analysts and investors, on the other hand, are more gloomy and fear the company won't live up to its potential and will end up just another production corporation. They believe that the company is highly subsidized, overvalued, and susceptible to the competition. Tesla stock price estimates exhibit a wide variety of discrepancies. $302.50 is Nasdaq's 12-month average price objective for Tesla. Although this is by no means the most optimistic forecast, it would indicate a respectable increase from the stock price as it stands. For Tesla shares, the most optimistic 12-month forecast is $760. Additionally, the most bearish analyst covering Tesla projects a one-year decline in stock price to $73. Naturally, though, these numbers are frequently wildly inflated. Generally speaking, financial communities have somewhat different perspectives regarding Tesla's near-term destiny. For example, Cathie Wood believes that the recent declines in Tesla stock make this an excellent time to invest in the company. Please hit the like and subscribe buttons if you enjoy this channel and would like to watch more entertaining movies on Tesla stock. I'll see you in the future video.